Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. Now, it's a very interesting day in our world today when we're looking at the Nairobi Securities Exchange. A couple of things have happened. We will be giving you an update of what happened in as far as trading on the NSE is concerned, and these are the statistics for the previous day of trading. Over and above that, we'll be giving you an update on two corporate actions. Kenya Power and Lighting Company has announced its financials for the year ended 30th of June 2019. Alongside this, East African Portland has also announced its financials for a similar period. Now, these two government entities have published their financials. They, however, have not been audited because of the lack of somebody to actually sit in the Auditor General's office and to be able to audit. That said, we will give you an overview of what is happening in as far as these numbers are concerned. Later on in the show, we'll be taking a deeper dive and looking at British American Tobacco Kenya's financials that were announced last week. These numbers were up 4.9% on a year-on-year basis. However, the revenue that went to the shareholders, which is the dividend that was paid out, was considerably lower. What is happening with these financials? What do you need to pay attention to? That's a conversation that we will be having later on in the show, and I will give you a snippet of the person who will be facilitating this conversation as we go along. Now let's circle back to what is happening on the NSE. Yesterday, turnover nearly doubled from 290 million reported on Monday at the beginning of the week to 502 million reported in turnover yesterday. What was happening? There was an equal split in terms of activity on the banking stocks as well as on Safaricom. Now, by banking stocks, we typically mean KCB and Equity Bank. That said, KCB was the top traded banking stock for the day with about 3.8 million shares traded over the day. Safaricom also saw nearly 8 million shares traded, and these two stocks were the bulk of the trades over the day. 502 million is the key number that we are looking at. In terms of looking at sentiment on the NSE, we cannot step aside and ignore what is happening at a global basis. The coronavirus is actually taking a deep dive in as far as sentiment is concerned, with global stocks reporting losses that have been seen as late as 2004. Hong Kong stocks have actually taken the biggest brunt of this negative sentiment, and they are reporting prices which were last seen in 2004. Earlier in this week, the U.S. stocks also saw a huge one-day decline in prices, but the thing that is driving this is largely based on the coronavirus. The coronavirus, which has emanated from China, is expected to have a negative impact in as far as output in this particular country is concerned. With that, there is a trickle-down effect in as far as global economic output is expected to grow this year, and there has been a negative sentiment on equities as well as commodities. When all of this is happening, what does that mean for the NSE? Now, Kenya has not yet felt the brunt of a slowdown that is directly correlated to the coronavirus. However, for the Nairobi Securities Exchange, 70% of turnover is foreign dominated. What this means is any negative sentiment that is felt globally is certainly going to have an impact in terms of its trickle-down effect on the NSE. For the NSE, the only differential is this is more of a sentiment-driven downside correction that is expected on prices, as opposed to a fundamental correction on prices. That said, we think that there could be an opportunity to pick up some good stocks in the coming weeks as long as this coronavirus spurt continues on a global basis. In that regard, we have seen a softening on the banking stocks as well as on Safaricom. Safaricom, which is the barometer of the performance on the exchange, has come off from a high of 33 that was reported in January. And now we're trading at 29 and getting lower price levels in as far as what is happening on the stock exchange. So negative sentiment on a global basis affecting the sentiment on the NSE. Expect further price correction on a downward cycle, at least in the coming days. And perhaps you could see some buying opportunities. We'll certainly look out for this and keep you informed. Corporate actions. Why are these government entities reporting revenues and as far as their profitability is concerned, there's nothing to write home about? This is the case for Kenya Power as well as East African Portland. Both these companies have delayed in reporting their numbers for the year ended 30th of June 2019. Why is this? Both companies have alluded to the fact that there was no Auditor General to be able to look at their financials to pass an audited review of these financials before they were made public. However, that said, they have both come out today and announced the financials for a period that ended 30th of June 2019. Let's start off with Kenya Power. Kenya Power reported a profit of 262 million shillings compared to, get this, 3.3 billion shillings reported in the last year. What was happening here? We did look at the financials and compared their core business and their non-core business. Their core business being the business of buying and selling electricity and the costs affiliated with this. This was more or less in line compared from 2019 to 2018, but the key differentiator was a 46% increase in finance cost. They paid slightly over 10 billion to finance their operations over the year. This is what management alluded to, the fact that this eroded a large chunk of their profitability, making them report a 262 million profit compared to a 3.3 billion profit in the previous year. If you take a look at the financials as well and focusing on the balance sheet, you will realize that cumulatively over the last 3 years, Kenya Power has reported an accumulated loss of 8.9 billion shillings. What that means is if you are a shareholder and you're still not thinking about getting out, you might not get a buyer, don't expect any dividend anytime soon until this company is able to reverse its negative equity position to a positive position. Now, moving over to East African Portland, it was a worse situation actually. When we look at the operations, the revenue was nearly lower 50% compared to the previous year. In other words, they were not able to even match the sales that they had done in the previous year. Second thing that was happening, there was a lot of restructuring going on in this company. It did let go of a couple of its employees last year as it's trying to reorganize itself and to become more competitive in this highly competitive space of selling cement in Kenya. When we look at the numbers, they actually reported a 3.3 billion loss, and this compares to 7.9 billion profit in the previous year. So two things happened here. Revenue was almost down 50% on a year-on-year basis, while the cost of operations actually surged because they did have to pay redundancy packages for a majority of their employees. There you have it. Government entities inefficiently run, is that the thing, or is there leakages that we cannot identify? Because these companies are able to return a revenue, but they're not able to be profitable. This is an ongoing conversation, especially in Kenya today, because even when you cross over and look at some sectors, such as the sugar sector, it's a similar conversation where the government says now they want to privatize because there are too many leakages that are happening in these companies, and they're not able to return a profit and really be able to return a dividend to their largest shareholder, which is the government of Kenya. I know now you've had enough of tiring news and news that doesn't make sense. Let's look at the private sector. Are they doing any better? Or is the government's interference continuing to plow and cause additional leakages in this other sector? British American Tobacco did announce its full year financials last year. The reporting period was for January to December 2019. They did report a lower profit, 4.9% to be precise, for that particular period. What was happening there? They did host a media and investor briefing last week, and some of the key takeouts were this. Regulation is becoming an interference. They have to pay a slightly higher tax levy following the recent budget pronouncements, and they're also having to deal with a lot of counterfeit, or really not counterfeit, products that are coming across borders, especially from Uganda, that are affecting their sales in this country. They estimate that they're losing out in terms of sales of about 1 billion sticks of cigarettes because they cannot be able to account for what comes from outside of Uganda and isn't taxed in this economy. But this is what I don't actually understand and agree with, and it has been a trend that has been happening. So this year, the dividend per share for each share owned is about 33.5 shillings. This is from a high of 35 shillings in the previous year. In other words, if you are a holder of this stock, you're getting a much lower dividend at a 6.7% yield. And if the current environment continues, this could continue to go lower. But I don't want you to listen to me. I want you to join us as we speak with an analyst from Dyer & Blair Investment Bank. And this is Cynthia Wangare, who has been following the stock, had a note out before the announcement, and also had a follow-up note after the announcement. We'll take a quick break, and she will be helping us understand what is the future trajectory for this stock. Should you hold it? Should you sell it? But what we want you to do is this. Go to your Twitter page, look out for Metropole TV, look out for Mbithe Mwema at Twitter, and tell us, the cigarettes that you smoke, can you tell whether they're counterfeit or not? Are you even aware of the new products that BAT has released into the market, such as Lift or not? And most importantly, do you think this is a stock that is worth holding at a 6.7% yield, or would you be a possible seller and switching to other stocks? Really want to hear what your feedback and what your thoughts are, and join us in this conversation. We take a quick break and we will be back shortly.